Do you want to learn a little bit about services in the Las Vegas area, maybe even internationally, and learn a little bit about real estate? Welcome to my show, hashtag Relax with Your Realtor. My name is Aphroditi, and I'm going to be interviewing a Keller Mortgage agent today to learn about jumbo loans, forbearance, the Zero Plus program. So stay tuned. All right. Hey guys, how you guys doing? Thank you so much for coming on to watch hashtag Relax with Your Realtor today. Aphrodite covering the Las Vegas area, and I decided to bring on Tyler today, who's with Keller Mortgage and a loan officer, and he's been in the business for quite some time. Why don't you tell me a little bit about yourself, Tyler?
Yeah. Hey, it's nice to be on. Hope everybody's doing all right. So I got into the business working for Chase as an underwriter, and I got some top quality marks for the company. And then Buddy told me about Keller Mortgage, and so I started underwriting for Keller Mortgage, and then I transferred over to be a loan officer, and that was more of my roots anyways. Went to school for marketing and with a sales background. And just miss talking to people. And reason I got into this business in the first place was pretty much to help people get a mortgage and kind of understand that process a little more, because and it had a little bit bad rap. So I wanted to lead by example, if you will. And I think being a loan officer, I can be more effective at doing that than in underwriting. So. Yeah, absolutely. And we had a big pipeline, so I might not have the years of experience, but I've definitely seen a lot of different loan situations, if you will. And I know what I don't know, which is important. So,
Hey, that's part of being a professional, is knowing how to admit when you can find the proper answer, right?
mm-hmm.
Well, I know since you're the loan officer and I brought you on today, I wanted to really cover a few items specifically just to educate people about Keller Mortgage. But at first, since everybody's talking about it, why don't we start with forbearance? What exactly is forbearance and how is it affecting people?
Sure. Yeah. So forbearance is simply just a postponement of your mortgage payments, or it could even be student loans payments. But for this instance, it's mortgage payments. And we've been seeing a lot of voluntary forbearance given as relief from service lenders. And that does help people, because then you don't have to make your mortgage payment for a month or 2 or 3 months. But what they don't tell you is there's negative side effects to that in some cases. Okay, so one, interest is still accruing, and you don't really pick up that interest until the end of the loan cycle. So that interest pretty much accrues over the course of the rest of the loan. And so that can be costly as well. Also, you are still missing your payment. So depending on how the servicer reports that to the credit bureau, it might not affect your credit score, but it might count as a missed payment. And if it counts as a missed payment, you might not be able to get a mortgage loan if you're in the market for purchasing a home or refinancing a home, that you might not be able to do that for 6 months and sometimes up to a year or more, depending on how many forbearance payments you qualified for.
Wow. So it sounds like definitely refinancing would be the better option if you had the opportunity to do so, still employed and all of that good jazz, right? Tell me a little bit more about refinancing with Keller Mortgage.
Yeah, so refinancing is usually a good option. Now, it's not a great option for everybody, but it really just depends on where you are with your loan in your loan cycle. Okay, and the best way to do that is to contact a loan officer, and we can work through your situation and see if it is best for you. So and it really helps for 2 different ways, because there's 2 different basic types of refinancing. One is a cash out and one is a no cash out. Okay, so no cash out is you refinance just your rate in term, hoping to get a lower monthly payment. Now, you could do a cash out refinance and get money out, or you can consolidate debt, which usually comes with a higher interest rate, but that interest rate is usually the total monthly payment is what you're worried about, right? So just with your loans, all your loans, so like your mortgage, your car loan, your student loans, credit cards, if you consolidate all that in, usually on a lower mortgage payment, then you save more money, even though your interest rate's higher than it was before. You could be saving hundreds of dollars a month by doing that. And the costs with Keller Mortgage, when you're referred by a Keller Williams agent, is what's so spectacular, because we waive all of our lender fees. So it's essentially a pretty cheap refinance loan, right? Especially if your loan amount's above $150,000, we get better margins for interest rates, and we also give you the $1,000 Keller Mortgage 0+ lender credit to help you pay for your other closing costs. A lot of times when you do a refinance and your loan to value is below 80% or even closer to 50%, you get what's called a property inspection waiver. And it doesn't happen with everybody, but if you qualify for a conventional loan for this product, then we don't have to get an appraisal, which means you save $500 right off the bat, and that's just another cost you don't have to pay. Not all companies utilize the property inspection waiver, but we try to take full advantage of it when we get the chance. For instance, I had a customer in Vegas, and you hold aside the prepaid items, right? Because that's your homeowner's insurance and taxes. When you have a refinance, you already have those. You already have an escrow account that's accounting for those. So the third-party costs ended up being $900 because we waived the appraisal, and his loan amount was above $150,000. So you got a lender credit of $1,000. That credit was too much to pay for his costs. So like he basically got a free, essentially a free refinance, and he lowered his rate. And that's what I love. I love that guy. That person was put in the best situation that we could put him in. He basically didn't really pay for the refinance at all because of our deal. And he saved, I think, $225 or something like that a month. So it was really a great situation.
Wow. And it sounds like this is the type of opportunity that people could take advantage of that are either experiencing pay cuts. I know that there's companies out there that are doing pay cuts that are, experiencing the repercussions with COVID. And wow, it just sounds like I already know Keller Mortgage really provides a lot of opportunities. To hear that about the refinance aspect as well just makes it even better. So I'm really happy that I was able to cover that because, got to get it straight from the source. So
yeah, well, absolutely. And that's not every situation, right? But when those happen, you just think about that. That happened a year ago, and I'm still, telling people about it today. So, but yeah, absolutely. When there's pay cuts, as long as you're still working and we can use some of your income, then you can potentially get a refinance loan. And then there's so many different options when it comes to trying to refinance that sitting down, we can find something for you,
right,
to help you out. So,
right. Those options, you just got to ask, especially right now. I know everybody's trying to save money in any which way that they can, especially in a home purchase. And that's the highlight that I want to talk about today. I want to hear more about the 0+ program and all the benefits that Keller Mortgage is providing if you're referred by a Keller Williams agent. Can you tell us about that today?
Yeah, absolutely. So, our basic deal is basically we waive the lender fees, and that runs across all loan programs that we offer. So FHA, conventional, USDA, VA loans. So all of those, this deal is on top of that. So let's say VA, you get 0% down when you qualify. That's a deal for VA. Well, our deal is also on top of that. So we're also going to waive the lender fees on top of the 0% down. So, you keep that in mind. And when you start doubling those benefits, it can get really good for people. Interest rates are down right now, and we already have a pretty low interest rate on both purchases and refinances now. So the first things we waive when you have a Keller Williams agent is we waive the underwriting fee. It's an $875 underwriting fee. There's a $625 processing fee that we waive. There's also a 0.5 point discounted rate fee because we do have really competitive rates. So when you have a Keller Williams agent, we waive that fee. That's based on the loan amount. So if you have a loan amount of $200,000, that's a $1,000 fee we typically waive unless you have a Keller Williams agent, right? And if your loan amount's above $150,000, again, you're going to get that $1,000 Keller Mortgage Zero Plus lender credit to help you pay for your other closing costs. And even when you purchase, you still have the option of that property inspection waiver, so that doesn't really go away either. So for conventional loans, that is. So
Nice.
we can really get it cheap, and that's just our upfront deal that we offer people. That's not. There's all sorts of intangible benefits as well.
Right. Wow. And, on average, what the closing costs on a loan for your competitor could be anywhere from 3,000 to 5,000, depending on the percentage rate of whatever the loan is that they're getting.
Mm-hmm. Yeah, absolutely. And it's hard to say across the board, what other people charge, but that's pretty typical when I see fee sheets. When we say we save people thousands, we typically do. I see the fee sheets from our competitors, and we usually have an interest rate that's right there or below what someone else is charging, and quite literally 2 to 3 to 4,000, depending on the loan amount that we save them.
Right. Wow. I mean, I don't see how you could get any better to be able to waive all of those fees. I'm definitely going to make sure I've let a lot of my clients know about it, as I know I had somebody call you today.
Mm-hmm.
But
Yep.
but the last topic that I really I'm interested about, because it's been difficult for some agents to get jumbo loans,
Mm-hmm.
and get them funded, and that they're changing every day because of the unforeseen times. But I know that Keller Mortgage is still providing jumbo loans. Tell me the restrictions, all the details about what's going on with your jumbo loan program.
Sure. So yeah, we do have a jumbo loan program, and it's true. A lot of investors did back out from offering those in these uncertain times. However, now it looks like we are seeing a little bit of a dip in those rates, so they are going back to being competitive again, which is always a good deal. However, for the jumbo option for this lender, you have to have a 20% down payment, which when we're talking about jumbo loans could be high. It's $510,400 is the county loan limit, that not counting high balance. So anything above that would be considered a jumbo loan, unless you're in a high balanced area. So 20% of that can get pretty expensive for even some more well-off people, right? You have to have a 700 credit score, and your debt to income figure is 43%. So it's more of a challenging loan. There's also some documentation requirements that are above your standard conventional loan options. However, it's still a really good option when we're talking about $1 million houses, and we can definitely still do those type of loans for Keller Williams agents and non-Keller Williams agents, but for our borrowers, we can definitely do that option. We'd like to give our customers options. So we've been working really hard, our financing team, to come up with other options that we can provide our agents and borrowers. And that's basically doing a second loan on top of the conventional conforming loan limit. Okay, so if we're talking about the range of total loan amount, about $700,000 to $800,000, we can usually, depending on your area, do a conventional loan, $510,400, and then add that second loan on top, and then you can add your down payment, usually 10% or so. And then those loans are considered conventional conforming loans. So the interest rates are still going to be lower. The documentation requirements are going to be lax, just like they are in any other conventional loan. And we do that because we truly want to give you guys options. We don't want you to find borrowers, go out there and spend your time, resources, and find the well-qualified borrowers, but you don't have a loan option for them. So that's what we really tried to accomplish, and I think it's turning out well so far.
Wow, that's amazing to know, because I'm sure there's people out there that want to take advantage of the low interest rate, potentially want to get into their dream home, their retirement home, whatever the situation be, or upgrade from the situation that they're in because their family doesn't fit. And a lot of lenders are out there closing doors, and Keller Mortgage is here opening them up, and I'm proud to be a part of it. So thank you so much for covering all the information today. You've been so helpful and so knowledgeable. And I'm going to make sure to include all of the links for all the information so people can reference it. And
Absolutely.
thank you so much for coming on today. And I hope it was useful for everybody out there. And you have a great rest of your Memorial Day weekend, all right?
Absolutely. You do the same.
You have a beautiful day, Tyler.
Yep.
Thank you so
Yep.
much.